What's up, everybody? Lately, a lot of news outlets are saying that the U.S. housing market is already in recovery mode because some places are seeing houses sell way above asking due to the lack of inventory. But not everybody agrees. In fact, a recent report from Pantheon Macroeconomics argues that the U.S. housing market's activity this spring was simply a head fake and that the housing market is far from experiencing a true rebound. We are baffled by the emerging narrative in the commentariat that housing is now recovering, because it isn't. Home sales jumped at the start of the year, lagging the late 2022 dip in mortgage rates, but they have fallen more recently thanks to the latest back up in rates. And mortgage applications signal they will soon dip to a new cycle low, wrote Caryn Clancy, the senior U.S. economist at Pantheon Macroeconomics. So why is Clancy taking the stand that the U.S. housing market is nowhere near the bottom? What does he think is going to happen in the future? Today, we'll take a look at Lance Lambert's article in Fortune titled, "Housing Market Affordability is So Out of Whack That the Bulk of the Drop in Home Prices is Yet to Come," says Pantheon Macroeconomics. And we'll see what they are saying. So let's dive right in. The key hurdle to a true recovery in the housing market, writes Clancy, is affordability. As we know, between the escalation of home prices during the pandemic boom and the super high interest rates, which are around 7% today, housing affordability is at a critical stage. In order to correct the affordability crisis, Clancy thinks that home prices have to come down way more than they already have. The broader point here, though, is that the bulk of the drop in home prices is yet to come. The lagged effect of the plunge in sales points to a steep and sustained drop. The speed and scale of the adjustment in prices is uncertain, but the direction of travel is clear, wrote Clancy. In Lambert's article, he points out that economists at both CoreLogic and Zillow think that home prices bottomed out earlier this year, referring to the fact that national house prices, along with new home sales, are rising again. In Redfin's latest housing market update, the data shows that the median U.S. home sales price rose 1.5% from a year earlier during the 4 weeks ending July 9th, the first increase in nearly 5 months. Prices are rising despite relatively low demand because there are just so few homes for sale. New listings are down 27% year over year, the biggest drop since March of 2022. But Pantheon Macroeconomics isn't buying it. In particular, Pantheon's Clancy thinks the home builder rebound is driven by aggressive builder discounts and a lack of resale inventory, not an actual housing market recovery. The shift in sales towards new homes does not change the bigger picture, however, which is that a durable recovery in overall market activity is out of the question until affordability improves. Mortgage payments for a buyer of a median-priced existing single-family home are now about half of average after-tax incomes, up from 30 to 35% pre-COVID. Home sales can't recover until affordability improves, which requires lower mortgage rates or falling home prices, or both, wrote Clancy. In short, the housing market is not in the early stages of recovery. The downturn merely is morphing from a collapse in demand, sales, and construction to falling home prices and housing-related consumption spending. We all know that the market will not be balanced until affordability improves. And looking at this week's economic news may be the first sign of hope, as the latest Consumer Price Index report shows that inflation cooled more than expected in June. This month's inflation report is likely to bring mortgage rates down a bit from the recent highs. It shows that the Fed's interest rate hikes are working and ups the chance they'll only hike rates one more time this year, said Redfin economic research lead Chen Zhao. Because elevated mortgage rates are responsible for both of today's major home buying challenges, high monthly housing payments, and low inventory, any decline is welcome news news for buyers. But even though rates will come down slightly, they'll likely remain well above 6% until the Fed sees several more months of inflation readings closer to their target. If we do see interest rates come down where it makes mortgage rates in the 5s or even the 4s, then sellers who have been holding out because they don't want to trade in their low interest rate around 3% for a much higher one around 7% may be convinced to enter the market, which would change everything. Housing affordability will improve on the lending side, but what do you think is going to happen to home prices? Well, if you believe real estate entrepreneur and Shark Tank star Barbara Corcoran, as soon as mortgage rates go down, home prices will go through the roof. The minute those interest rates come down, all hell's going to break loose and the prices are going to go through the roof, she said. Right now, sellers are staying put, but they are not going to stay put if interest rates go down by 2 points. It's going to be a signal for everybody to come back out and buy like crazy, and the house prices will likely go up by 20%, she said. We could have COVID market all over again. So how does this fix our affordability problem? It seems to me we're just trading in one problem, high interest rates, for another, even higher home prices. Now, as we know, real estate is very localized. So what's happening in one part of the country may be very different than what's happening where you live. But if you look at the national data, according to Redfin, the median home sale price is up 1.5% from a year earlier. That's the first year-over-year increase since February, and just $2,500 shy of the record high hit in June of 2022. And this is with high interest rates. Other current housing market data from Redfin includes pending home sales were down 14.8% year over year, continuing a year-plus streak of double-digit declines. This is clearly due to a lack of inventory. Active listings dropped 14.4% from a year earlier, the biggest drop since March of 2022. Active listings were down slightly a month earlier, but typically they post month-over-month increases this time of year. Homes that sold were on the market for a median of 27 days, the shortest span in 10 months. That's up from 21 days a year earlier. 36.8% of homes for sale sold above their final list price, down from 49% a year earlier. On average, 5.5% of homes for sale each week had a price drop, down just slightly from 5.7% a year earlier. And the months of supply, which is a measure of the balance between supply and demand, was 2.8 months, the highest level in nearly 3 months. But just so you know, they say that about 4 to 5 months of supply is a balanced market. So 2.8 months, it's still a seller's market. But what do you guys think? Are you seeing more inventory where you live? Are you seeing price reductions? Or are you seeing bidding wars? Do you think that we're already in recovery mode? Or is Pantheon Macroeconomics right and the housing market has a lot further to fall? And what about interest rates? Do you think they're gonna go down in the next few years, possibly to 4%? Because Morningstar does. They think that interest rates will be at 4% by 2025. We went into their forecast in last week's video, so if you missed that, definitely check it out next. Thanks for watching. I do appreciate it. Bye!